Good morning, everybody. It's Friday, September 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had December corn up 5 1/4 at 4.11 1/4. November soybeans were up 7 3/4 at 10.18 1/2, and December Chicago wheat finished up 12 at 5.90 1/2. This morning, the USDA announced an export sales announcement of 100,000 metric tons of soybeans to China, and that's for the 24 crop year. Good morning, guys. We're going to wrap this week. Obviously yesterday on the heels of the USDA report, corn, after trading, sub $4, posted a pretty nice rally to close well. We were talking before the show, Dustin, that we're kind of edging up against some technical areas that with a good close today could maybe spark a continued interest in this market. So maybe give us a rundown there, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, so I think when we really haven't had much strength that's held for corn. I think Ben made this mention. Almost every post report we've seen to find another bout of selling, and I think that's like the that could have been some of that overhang of old crop corn. It's just like it came back to the positioning problem that we had, but we are starting to see some sustain here. We've seen a lot of spread strength. We've seen every time it kind of gets down there and trades down by 4 or sub 4, we seem to find some more buying here, which is interesting. So, we're still not really into that, gut slot of harvest yet. So maybe that's partly why it's allowed to happen. But that 100-day moving average up at 436, I think that if we kind of really push through these recent highs, somewhere between here and 436 would be an awesome spot to see if that market opportunity comes prior to getting into, the bulk of these bushels coming to market.
That's good. Ben, maybe a few thoughts from the east this morning, but also looking at soybeans too. We've been real focused on getting corn to turn around, but you got Nove beans back up into almost 10. You got over 10.20 overnight. What are you looking at there? You're muted, Ben.
Oh, sorry.
Mm-hmm. Nope, you're muted again. There you go.
Am I good?
You're good, buddy.
All right. Sorry about that. 50-day moving average, we tapped it overnight at 12.20 1/2. Pretty critical spot at 12.22. If we can get above that, if you look and compare how corn has fought over the 50-day moving average, it's trade at or above or below the 50-day moving average for 9 days in a row now. Would not be surprised to see something similar take place here in beans as people jockey back and forth to see what the next leg is. I don't put too much stock into it, but if you looked at the WASA reports, they reported a 10.80 on-farm price for soybeans this year. We're trading 10.20. Maybe we overshot the downside for now. I think that interested to see how things trade today. We've kind of had a tendency to sell off the day after reports for going on a pretty long time now, 6 months, 8 months. And some good strength overnight as there were not more sellers off some bearish yield numbers. Certainly, there's a glimmer of hope when the supply numbers, when you see that they still lowered carry-in on corn. So, we're in a tough spot here on the calendar. You've got the next couple of weeks before we get into really gut slot harvest to get to the point where we overwhelm the system. And I do think that's going to happen at some point, but maybe we can sneak something in there prior to the Fed meeting next week. Maybe there's some concern there as well. So it's price action. If you could get beans to take out the high from the other day, which was 10.31ish, you could give them a pretty good little leash for a while. I think maybe a quick try of 10.40. I think it'll run into some traffic there, and ultimately next moving average is the 100-day at 10.95. So I kind of feel like beans, more uncertainty there with yield as people scratch their head on on the yield number that was published yesterday. So, yeah, I think you wait and see. I hope that we can maintain strength today. I think that would be a very positive sign for the grains.
Sure. And Dustin, one thing, I mean, not to be a Debbie Downer, but like you look in some of those numbers that Ben's throwing out, if you were to test a 1040 type of level in beans, even looking out forward though, the world ending stocks to use ratio is not good, right? I mean, you're projected to be, even more bearish than say 18, 19. And we all know what the pricing environment was. So, just from an opportunity standpoint, that could be a heck of a shot if you got to catch up, in those type of areas based on what we still know today.
Yeah, 100%. I mean, I think it's hard for me to, have too strong of an opinion on where flat price is when we continue to lose purchasing power, and hard assets are still, kind of riding this inflation wave. We know that, 1040, 1050 is really not a profitable selling price. That's the problem. I'm sure if we're hitting well above trendline yields, it is. But like from where we started for an average, target yield, APH yield, university data shows that that's a losing price, generally speaking. And same thing for corn. We can make these numbers work for, some growers at reasonable costs and have record yields right now. But these are still unsustainable prices for the long term. And that expands out, not just in the US. So I don't want to get overly cautious and say, oh, we need to sell everything when we get a rally, for both 24 seasons and 25 seasons when there's still something about the currency that, is still driving gold. For example, yesterday, new all-time highs, well above the previous all-time high. So that's still in the back of my mind. But yeah, certainly after trading down into the nines, we hit like this long-term trend line support on beans. You go back to like a monthly chart. We hit that and now all of a sudden we're maybe $1 higher when you factor for the carry, well above that higher. So if you're carrying out to JFM or beyond, these prices start to look really good. And if you're also starting to see record yield at the same time, maybe that's a profitable selling price, and that'd be a win, right? If you had been coming from what appeared to be a loss to all of a sudden back to a profit. Yeah, I don't disagree. That's a target to be looking for. Getting to that balance sheet, like you mentioned. So yesterday they posted a 550 balance sheet. That's with keeping yield unchanged at 53.2. There's a little bit of fluff there in those numbers still, I think, on the export. So, to get to a 550 ending stocks number, we've got 1.85 billion projected for exports. Last year we only did 1.7. So we get into South American production in December and January, and they're looking to see the rains come back and having potential for a normal crop. I think that easily could be another 150 million bushels that comes off our balance sheet. So even if we post a one or down to a 51 yield, a national average, that it's almost an equal balance once we start taking that balance sheet back down from an export standpoint. So I don't think there's a real clear path to being bullish beans unless South America starts to have a problem.
Yeah, and we're talking the driest they've been in 30 years for to start. So there's a path, but
yeah, if they go into, the thing is it's like drier than normal, but they still had a decent amount of rain in that 2-week forecast as of yesterday. I haven't checked it this morning.
Yeah, it's got to hit. It's generally supposed to be here in the next 2 to 3 weeks. If it's gonna flip, and get into their wetter season, it'll be coming.
It's just like us though. We have a dry start for beans, but we get the rains at the right time. We can still have a really great yield, and right. It is a rainforest. They have. I don't think we should automatically think this is a year or we're due for a year. It's always possible. If this is the trend, and we're having some sort of dry start that trends right through the season, and they have a 20% yield cut, we have a chance to go to $14, $15 beans if that's the case, but I don't know if we want to plan on that. We want to make sure that we know that that's a possibility, and that if we're selling beans today, we either don't look back and say well, we understood that was a possibility, that they could have a problem, and then we missed out on a selling opportunity, or you just simply protect yourself with a call option or a call spread, something that allows you to still partake in it, but still you do the prudent things you need to do to raise your revenue on our terms.
Sure.
So
no, that's good stuff. Jace, you talked a couple days ago just about wheat and looking how the wheat charts are turning pretty interesting here, and we were talking a little bit before the show that the White House is meeting today to discuss the possibility of using munitions from the Western world in this war, and Putin certainly had aggressive rhetoric on the other side. You couple that with some dryness that they've been experiencing over there. Wheat's got kind of an interesting little makeup here, both geopolitically and from a charting perspective.
Yeah. I'm no wheat expert. I hate trading it, to be honest with you. So I just look at wheat and see how that might affect corn. I mean, to be honest with you, right? So
right.
I guess I kind of mentioned yesterday, I like the price action of wheat lately, right? To your point, some of these geopolitical things could be interesting on how wheat trades in the short term. So definitely something to keep an eye on. I just, looking at the price of wheat, and if you're, the majority of our customers, right, are corn and soybean farmers, obviously we have some wheat acres as well, but, any positive price action in wheat should positively help the corn market, right? So I'm looking at the new crop wheat prices and just hope they stay strong and continue to trend higher. And I personally think that new crop corn prices are too low.
Talking 25.
Yeah, I'm talking 25. Yep, 25 crops. So, you got a decent premium of wheat over corn. If that continues going into some of the, planting intentions post-harvest, where guys might consider planting a little more wheat, would be positive for corn. So just keep an eye on that. Other thoughts, I think Dustin put in the letter last night, which I thought was interesting from the USDA report, just some of the deviations between ears per acre and record yield. Nothing special on the ear counts that they did on a 10-state region, but obviously implying high kernel counts or just high test weights, which wouldn't be surprising. Just interesting to see it though, right? Where you're like, wow, I mean, it's going to be a massive crop and just massive test weights. And I think Dustin mentioned too, right? Like you gotta, there have been years where you started that out with those expectations, and some of those test weights really dropped off in the end of the season, affecting the national yield. So, which would be good for price, obviously, right? So if we start to taper some of those yields back over the next couple of reports, and we're already starting to trend higher in corn, and if we start hitting some of these target levels and surpassing them, it would be typical of what we would see in a season, a seasonal rally that we make a low in September. I think we're going to need to cut yields back. I'm not calling for it by any means, but I guess it wouldn't surprise me, if maybe, the harvest drags on a little bit and some of these yields come down. Same thing in beans too. We saw pod counts weren't anything special, so implying some big beans in those pods. So it's a good fill. But yeah, other than that, I like the price action for sure. I think a good close today going into the weekend wouldn't surprise me. And in any bears out there, might be second guessing their position here, which would be welcome.
Yeah, it's been a while. They've been winners.
Yeah.
I would add to that just kind of an old observation that a guy taught me a long time ago. He said, be careful of markets that are not doing what you think they should be doing. And following yesterday's yield numbers, I think that's a pretty relevant topic if we can finish these markets today with some strength to them. So
that's very good. Jace, last thing, you're seeing more and more combines starting to roll up in your area. kind of Northwest Illinois?
Hearing it, I honestly, driving down 88, from the suburbs to northwestern Illinois, didn't see a lot of it. I've heard it though. I've
Yeah.
talked to some guys that cutting beans, definitely picking corn, hearing really good yields in both. So really early to get into not a lot of beans, I would say, have been done, and obviously not a lot of corn, but I'm guessing, and you've heard that too, Dan, right? I mean, it's drying down quick.
It is.
I know we're probably going to start here this weekend on some of our early stuff. Don't know if we're going to start on corn or beans yet. But yeah, we'll be rolling here pretty soon. So
cool. I had looked out, I looked out 12, 14 days, and it's Garden City up here in the northern part of Illinois. So
yeah,
guys are gonna be rocking, I think.
Yeah, I think if you guys you definitely go check, go see if any of your fields are ready, because I've been hearing people are a little surprised that it's dried down as quick as it has, so get after it.
It's exactly right. Real quick here, we'll put a bow on livestock. Steady cash trade seems to have supported us the last couple days. And the one thing I noticed was yesterday's USDA upward revision of their 24 export forecast for pork, which I thought kind of maybe caught a few people by surprise. But anyway, wrap us up for us today.
Yeah, no problem, man. Looked like, the trade in the South so far has been steady. There's still more to go from what it looks like, I think, in the North. And that's really where I think some of the support came from. I mean, Northern trade dress sales were like 290 to 294. So, that was definitely higher than expected. And I think once the news kind of broke that they were paying up in the North, just kind of made everybody feel a little bit more excited. So I think that's really what got us whooped up. We ended up closing over the 25-day moving average. So, I think just we breathed some life into the market. We were 4 days straight up. So we kind of need to hold this right now, and maybe we can use that as a support level. So kind of good news going into the weekend. We'll see if that carries over. But generally speaking, the market's definitely outperformed, I think, expectations on the cash side. So I think it's just going to leave the shorts a little bit uneasy kind of going into the weekend. Plus, we did see a new increase in open interest, about 479 contracts. So looked like we had a little bit of new buying yesterday as well. So yeah, going back to the WASD, I don't think the report was really that shocking on the beef side of the market. Production forecasts were raised for 24 and 25. And I think a lot of that, at least they cite, really just coming from heavier cattle weights. And I think that's going to be the real standout. That's going to be a big metric that they follow. And just as we saw, steer weights were up 2 pounds from the previous week, and we're still 27 pounds over a year ago level. So that is really, I think, gonna be one of the big focus for for projections down the road, if these weights just continue to increase between now and the end of the year. On the pork side of things, it looks like they're pretty optimistic as far as the export market goes. It overall, it just seems like they say that we're going to be seeing faster than expected slaughter paces, lighter carcass weights as far as production goes. But we'll see. We've been on the break on the US dollar. We'd really expect to see the export market kind of heat up at this rate, especially on the pork side of things. So I think that gives a little bit more optimism just from the demand side going into next year, when we know that supplies are probably going to still be pretty heavy, or at least ample, going into next year. So we'll see what the market thinks of it. Usually we kind of gloss over it, but I think it's something good just to kind of keep on the forefront and just in the back of everybody's mind going into next year.
Very good. Appreciate it. We'll look forward to your update on Monday. And it is Friday. We have wrapped up the week for War Room. And with that is Fun Fact Friday. Bri, what do you got for us, buddy?
All right. Thanks, Dan. Happy Friday, everybody. As Dan, you said to start the show, it is Friday the 13th. So all you superstitious people out there, be careful. But most superstitious people believe where it originated from was the Last Supper. And you know who the 13th guest was? You guessed it, Judas. So we all know that he betrayed Jesus there.
Oh.
Yeah, that's crazy. So Friday the 13th comes in threes. Every year we'll at least have one Friday the 13th. The most will be 3. As for the stock market, it's actually pretty friendly on the 13th. Usually a 50% friendly tone to the market, unless buyer beware, it lands in October. S&P drops about 0.5% on that day, And the outlier in that October 13th, 1989, the mini crash dropped 6.1%. So just be careful if it lands in October. For our movie lovers out there, the camp is actually still functional. I'm not sure what parents would actually send their kids to that camp. I'd kind of be freaked out a little bit about that. And Ryland, lastly, if you're ever thinking of moving to French Lick, Indiana, Larry Bird's childhood home, you'll have to put a bell on your black cat. They're very superstitious there, so you got to let people know that they might be crossing the path of a black cat.
I've been looking at property, so I'll see if I can find some bells.
All right, but be careful out there if you're very superstitious. Have a great day.
Very good, Bri. Appreciate it, buddy. So we will we'll wrap here for the week. We appreciate everybody that tunes in on a daily basis. It doesn't cost you anything to do so. Throw us a like or subscribe. Helps us out, and we'll keep you posted on everything AgYield for you. So like I said, like and subscribe. We appreciate it. That we have a blast doing the show, and we hope everybody enjoys it as well. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Thanks for the thoughts and comments here this morning, guys. It was a good conversation. One last rundown of the markets before we go this morning. We're up 6 1/4 in Dees corn, 4 1/4 in Nove beans, and December Chicago wheat's up 17 now at 5.95 3/4. So hope everybody has a great weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.